Hi, I'm Jimmy. In this video, I'm going to walk through my analysis of Tesla, ticker symbol TSLA. The goal of this video is to look at the basics of Tesla's business and try to determine what Tesla's stock could be worth today. And then ideally, we want to see if it makes sense for us to try to buy Tesla's stock at the current price. Okay, let's jump right in. So how about we start with Tesla's revenue? And as we can see here, well, they've done a great job of growing revenue since 2012. Those green bars, those are analyst estimates, and it seems that analysts are expecting for Tesla's revenue to continue to increase over the next couple of years. Now, we may notice that in 2019, it is an estimate, but that's only because the fourth quarter of 2019 is not on the books yet. But this part right here, this red part, well, that's the amount that is already on the books. So already they've booked over $17 billion in revenue through the first three quarters. That would mean that according to analyst estimates, they have to book somewhere in the area of $7 billion in revenue for the fourth quarter, which is very possible since they posted over $6 billion in the past two quarters. Okay, now I'm sure that most of us already knew that Tesla was growing at an awesome rate, but clearly their near-term issue is going to be profits. So this is a chart of Tesla's profit going back to 2012. And once again, we can see that 2019 estimates, according to analysts, are supposed to have Tesla showing a slight loss in the profit department. Now, this is interesting and all, but I think we can get a clearer picture if we switch this over to quarterly numbers. Because once we go to quarterly, well, we can see that in 2019, the first quarter, there was a big loss. Second quarter was a bit better, although still a loss. But then in the third quarter, we saw a profit, just like we saw back in the third quarter of 2018. Now, in Q4 of 2018, Tesla also saw a profit, just like the analysts are expecting for it to happen in Q4 of 2019. But personally, I think the key is Q1, the first quarter of 2020. Sure, they need the next quarter to be profitable, but if Tesla could stay profitable going into 2020, well, that would be their first profitable first quarter. And I think that Tesla's stock is likely to react quite nicely to that news. Okay, now regarding Tesla's business in general, before we try to value Tesla's stock, I think that it's important to point out that 2019 has been the year of the Model 3. The good part is that this car is much more affordable than many of Tesla's other cars. I think they priced it starting somewhere in the mid $30,000 range. The negative side to creating a lower priced car like this is that generally what a company would end up with is smaller profit margins, and that could ultimately hurt Tesla's stock. But when we look at the number of Model 3 sold on a quarterly basis over the past couple of years, well, we can see that they are rapidly increasing the number of Model 3s that they're selling. And when we add gross profit margins to this chart, well, now we can see that although gross profit margins did start dropping in the third quarter of 2018, they didn't fall below the first quarter of 2018. And it looks like they're starting to swing higher. I would have expected a much larger drop-off than this. Now, this means only one thing, and that is that Tesla is cutting costs. And this is likely a good thing for Tesla's stock. And this brings me to some good and bad things for us to consider when looking at Tesla's stock. First off, the bad. So the bad is, over the past 12 months, Tesla has produced about 350,000 cars. And to put that in perspective, last year, well, GM produced about 8 million vehicles. Volkswagen produced more than 10 million vehicles. So in an industry that has historically had a very high barrier to entry, well, the major players in the industry have big economies of scale compared to a company like Tesla, who is still quite small compared to how many cars the other companies are producing. But the other side of that is that the future of automobiles is electric vehicles, and Tesla is already there. So essentially, Tesla is the future of cars. Now, I'm not saying that Tesla is a shoo-in for being successful. In fact, the first gasoline producer in the United States was created by I believe their name was the Dury brothers, and they sold their car at that time for a bit over $1,000. But about 20 or 30 years later, well, Ford created the Model T, selling that car for about $300. So lowering the cost is going to be very important to Tesla's overall success as far as mass adoption goes. Because whether or not we like it, $30,000 or mid $30,000 price range for the Model 3 is simply too expensive for many, many people. And Elon Musk has stated that he wants Tesla to be widely adopted. So the key to that is going to be getting the price down, which becomes very possible with one of their other key advantages, and that's their battery. Tesla has a superior battery, so they can continue, in theory, to produce or to lower the costs or the production costs of their cars, which would allow for a wider and wider adoption. Right now they have the Gigafactory in Shanghai, which is already producing cars on a trial basis, and they're also putting up Gigafactories in different spots in Europe. And at the end of the day, once they have a larger economies of scale, it's possible that Tesla could at least remain profitable and ideally continue to grow profitability at a fairly rapid pace. And this brings us to trying to value Tesla stock today. Now, anytime I want to come up with a fair value of an unprofitable company on an annual basis, I know that some of the quarterly numbers have been profitable, but since you got to use annual numbers for that, it could be somewhat tricky. That being said, I'm actually going to try to use a price to earnings ratio. But since we can't use 2019 because 2019 earnings aren't going to be profitable, well, I think it makes sense for us to look at some assumptions that analysts are making and then try to use 2022 estimates to see if we can come up with what the fair value of Tesla stock might be today. So we're going to assume that Tesla goes profitable, they stay profitable, and this is what their earnings per share could look like if we believe analyst estimates. These are as far out as I could find according to analyst estimates. And according to those estimates, they're expecting a profitability in 2022 of $17.20 per share. So now our question is, which PE multiple is appropriate to use on 2022 numbers? Now, right now, the S&P 500 is trading at a forward PE of about 19x. A forward PE is when you take the next 12 months of earnings. So if we were to switch over to a timeline here, let's imagine that we believe that Tesla is going to trade at a slight premium to the market. Let's say we think that they're going to trade at that time at a 20x multiple, so 20 times profits of the next year, which means that Tesla stock would be worth about $344 per share. But the key to this is that's how much it would be worth at the start of 2022. Since our assumption is $17.20 in the $17.20 they earn through 2022. What is it worth at the start of that? $344 if we assume that they're trading at a multiple of 20 times profits. But now, what do we think this is worth today? In order to do that, well, what we need to do is we need to discount our $344 per share by 2 time periods to account for the 2-year gap between where we are now and our 2022 estimates. Now, let's assume that we have a required rate of return of 8% per year. Well, we divide our $344 by 1.08. The 0.8 represents our 8% required rate of return. But don't forget, we have to raise that to the power of 2, which represents the 2 time periods. When we do that math, we end up with a fair value at the start of 2020 of $295 per share. So given that Tesla is currently trading at about $330 per share right now, well, for me, it seems that Tesla stock is slightly overvalued compared to our calculation of fair value. And it's important to point out, we wouldn't even want to buy Tesla stock at $295 per share. We would want to buy it at some discount to that calculation, because that calculation assumes we will get 8% per year, and it assumes the 1720 will be at least close to accurate, and that Tesla stock will be trading for 20 times next year's earnings. There's a lot of assumptions in there, so generally we want to build a little buffer into where we actually buy it, so it would be somewhere less than the $295 per share. Now, if you're curious to learn more about when to buy a stock, well, I actually did a video that focuses on that exact topic, and that could be a good next video to watch if you're interested. If you haven't done so yet, please hit the thumbs up, hit the subscribe button. Thank you so much for sticking with me all the way to the end of the video. I really appreciate it. It really helps the channel. Thank you, and I'll see you in the next video.